the stock actually has lost almost 45% in the last 1 month. Why would, a D2C brand need to go offline? And I think the answer lies in this chart, which is if you go back to 2019 or even 2023, when essentially most brands would get to 100, 200, 500 crores, and Honasa at beyond 500 had to also look at offline as a play.
People think that going offline is a function of scale. Okay, that from here to here we'll do online, from here to here we'll go offline, right? I think it's also a function of, it is more a function of brand tenure.
Expectation for FMCG/new age brands should be more like 3.5-4 times of revenue, because your potential end state EBITDA is going to be suspect.
It means that domestic capital could be a real legit pool availability which Indian entrepreneurs could use over time.
Today I just took a one-day flight to Pune from Delhi without a return ticket, which is something strange for me. I've never indefinitely gone to a location since I can remember.
Delhi's GDP going flattening even, right? It's not a bad thing.
तुम लोग क्लियर क्यों नहीं आते चश्मे में?
आपका नंबर क्या है? नंबर क्या है? नंबर के बेसिस पे क्लियर आता है क्या?
क्या अभी देखो सैटरडे मॉर्निंग है, अपने व्यूअर्स देखेंगे इसको मंडे रात को. अभी क्या स्कोर हो गया अपना? 26 for 0.
36
for 0. 42 for 0. ठीक है, तो हो गया 90 रन का लीड हो गया. अभी 80-90 रन का लीड.
What do you think is a good target for us to actually get a win?
I think the function is how much rest can we give Bumrah, Rana and
So basically you're saying it's not the absolute score, but the time that we can give them to rest and recover so that they can come back and bowl the Aussies out.
यार 18 ओवर डाले यार बुमराह.
मतलब same runs over, let's say 1.5 days versus 2 days will make a lot of difference.
So we should basically resist our temptation to be the aggressive batting side that we have been for so long now and actually go slow.
द्राविड ने वही बोला ना कि learn to leave the ball. If you can learn to leave the ball, bowler is forced to pitch ahead to take that risk, and then you will score more runs. And you can trust the bounce in Perth. So leave the ball as much as possible. It's an art.
My sense is, I think if you have a same T20 team which is going to play test match, then वो mindset change नहीं हो पाता. Attack, if you miss few balls, then the natural way to react is, okay, I'm going to go out in attack. And in test match, you only need to do one mistake. Right, so the play is very different. I think हो रहा है वो naturally. If you see, our T20 team is now a little bit alag. Test match team, I think my sense is that 6-12 months down the line, it's going to be separate teams.
I'm a big believer that controlled aggression is the best way to win long-term games, whether it's cricket or otherwise. If you see Spanish football from 2007 to 2014-15, I think probably the best football team ever to have played. Boss, their patience on the ball with Xavi, Busquets, Iniesta was insane. And then they would know when to attack. So I think that is the ultimate sportsmanship, when you know when to attack and you have all the arsenal.
The interesting point on different teams for test and ODI and T20 and muscle memory for the T20 batsman to be aggressive कि यार मतलब 2 ball छोड़ दिए तो अगला ball तो पैड घुमाना ही है करके, actually reminds me of that discussion that we have had on how do you make sure that as you scale a business, how do you continue to do 0 to 1? Because the mindset required to do a 0 to 1 and while the company is in the 1 to 10 or the 10 to 100 stage, just fundamentally requires not just different teams, but almost different cultural values in those teams also. But anyway, I think maybe that's another topic for another day.
All right, let's get to it, guys. Asymmetric episode 2. And today is Saturday, but our viewers are going to watch us on Monday. Revant, what do you have in store for us? First of all, before we go ahead, Chirag, I'm glad that you have converted, we have converted you into becoming a full-time crew member and taken away all your Saturdays for the foreseeable future.
Thank you. I hope, I live up to it. मुश्किल काम है ये. Doing alongside, there is a lot of reading, etc. which but I really enjoyed the first one. So then I thought कि मजा तो आ रहा है. Then we'll figure out time.
Great. Thanks a lot, Chirag, for joining us full time. Now, I think while we covered this topic a little bit in the first episode, I think it's time we do a little bit broader deep dive on this one. I think the talk of the last week fundamentally was the response of the public markets to the latest Honasa results. The stock actually has lost almost 45% in the last 1 month. In just this week, effectively, it lost about 25% and the company is now stabilized at about 7,500 crore market cap. I think we should start with this topic. Honasa has been the bellwether for most D2C brands / consumer brand startups, as they're one of the only companies to actually get built in the new age in the last 10 years and actually go IPO as well. What does the latest results and the stock market reaction actually mean for entrepreneurs, builders, operators, investors, etc. for this ecosystem is something that is worth debating, I think, over the next few minutes. So one of the aspects, if we go a little deeper into what actually led to the stock market reaction, let's take a step back, right? If you go back to 2016 when Honasa started, it started with one brand, which was Mamaearth. That brand effectively scaled to almost 1,000 crores, 900 crore plus by FY23. And by that time, they had also started a couple of other brands in the digital space. And everyone essentially had this question mark on how would a particular brand scale to 2,000 crore plus, because if you look at the bellwethers of the industry for the last 50 years, whether it's Unilever, ITC, Wipro, Godrej, etc., all of them would have at least one, if not more, brands which would be 2,000 crore plus. While all new age businesses in the brand space would start digitally, that's how their go-to-market strategies would be. As they scale, they would need to evolve across channels and at some point of time look at offline as well. Now, the first question that usually people have is why would a D2C brand need to go offline? And I think the answer lies in this chart, which is if you go back to 2019 or even 2023, when essentially most brands would get to 100, 200, 500 crores, and Honasa at beyond 500 had to also look at offline as a play, because fundamentally the overall BPC market seems to be concentrated in general trade and modern trade, which is essentially offline, right? Like 85% of in 2023 of revenue in beauty and personal care was happening in general and modern trade. So it was very essential for potential public market investors, if Honasa had to go IPO, to see how would they play out offline. And they did a good job. I think Mamaearth scaled well offline, and then there was a great IPO. I think the company reached the 15,000 crore market cap. But what has happened is, because there's been commentary from the management saying that the playbook for offline is evolving yet, and they will figure out a better way to do offline over the next 1 year, I think there is a little bit of question mark on can new age brands that start out online effectively do offline well as well. And that's where I think the stock market reaction was essentially, I mean, what it was is people just not being clear that can brands in the new age space get to 1,000, 2,000 crore size if they don't know how to do offline. And I think that's the fundamental question that's going to come to every other brand now in the ecosystem that is between 100 to 500 crores, or for investors who are looking to invest in this space. And I think that's a topic that we should look at, considering almost 20-25% of the capital now in 2023, 2024 in the VCP space is getting into consumer brands. So it's a large allocation of capital to a space where people have a lot of question marks on potential outcomes that could be created on size as well as EBITDA.
Yeah, I think very fair. I think I'm just going to premise this by saying that it is, I think following Mamaearth over the last 7-8 years has been a fairly easy and almost like a cheat code for companies like us, right? We look at what Mamaearth did with D2C. We saw what they were doing with capital raising. We saw what they started doing with e-commerce very early on. And I think just following Varun and Ghazal in the way they were executing was seemed to be a way to kind of do well. Like if they've done it, they showed how to do it. I think brands like us, even today, for example, they're 6 times our size. And for me, it is critical that they succeed. And everything gets, whenever we're in fundraising discussions, we are in value creation discussions, we're in return to shareholder discussions, etc. The one thing, the conversation is always that this happened with Mamaearth. Can we replicate it, do better, or come close in some shape or form? So that anchoring, and like Revant, the bellwether is the right word. New age brands doing well. I think Honasa doing well over the next 10 years is a hugely important thing for the ecosystem. And at Bombay Shaving Company, I don't know about Mosaic or GoKwik is more different this thing, but I think for us it's super important that they do well.
The questions I would have for both of you is on twofold, right? One is, it's a great business. It's still going to do north of 2,000 crores in revenue and close to 4 to 5% of EBITDA. So it's a profitable business. It's still doing well. I think the broader question, I don't think the companies, we have to first understand that stock market reactions are expectations versus outcomes. There was an expectation that was maybe not met, and therefore stock market will always react. But fundamentally, it's a great business because there is one large brand which is still close to 1,000 crores. There are a bunch of other brands now that are like this. The second brand is now the 500 crores. Third one is getting there. So there's a lot of growth left in the company, which people are very happy to see as well. I think the broader question that comes in is, what is the size of every individual brand that can happen in India? That is one. Second, what is the profitability matrix for each of these brands? So let's take both of them separately, right? If you go back to the chart that I had showed, if 80-85% of beauty and personal care spend is still in general and modern trade, can you build a sizable brand of 2,000 crores without going offline? That is the first question that always comes. And second, if you want to remain an online-only brand, you may get to 1,000 crore scale or 500 crore scale, because that is what you discussed in the last episode, Shantanu. But is the profitability there enough for you to give a 20-25% return on capital? Because what's important to understand is both these vectors go hand in hand in some way depending on the channel mix that you have. So would love to hear your thoughts on what should an online only brand do in terms of building more profitability or more scale if you're not going to go offline, and vice versa. What does it mean from a valuation perspective? Because you don't understand this, it's still a company that has created at a market cap of 7,500 crores, it's a phenomenal value creation for any early investor, right? The question always comes out is, do you want to, if the outcome that will get created at a 2,000 crore revenue is a 7,500 crore market cap, which is, let's say, 3.5 to 4 times of revenue, right? And we usually very loosely use revenue multiples, but actually they are derived from EBITDA multiples in that sense, right? At 5% EBITDA on 2,000 crores, it's 100 crore of EBITDA. So effectively, we can look at the charts actually of, I don't know if one of you has the chart readily available of long-term averages. I think the industry operates at close to 40 times EV EBITDA in India. In matured markets like US, the industry operates at close to 20-25 times EV EBITDA. So if you're throwing up 100 crores of EBITDA in a year, you would technically be valued at 2,500 crores in India and 4,500 crores, let's say, 2,500 crores in the US, mature markets like US, and 4,500 crore, let's say, like a market in India. Yeah. So the question always comes in that revenue is great, but how much EBITDA can you throw up, right? So what investors would love to see is, can you get to a 10-15% EBITDA at a 2,000 crore? And that's where the offline magic may sometimes be needed, because all these companies that do north of 15% EBITDA are heavily dependent on this general trade and modern trade channel as such.
Yeah. I will give you like one data point, right? Interestingly, Mamaearth is possibly 25 to 27% of Colgate India's revenue, but literally only 10% of market cap today, right? So there is a clear profitability math that now the retail investors are doing. And you're right, I think sometimes it's an expectation versus outcome thing, and there is more growth. But see, even if you look at the last chart you showed, we saw that there was 3.5% to quick commerce. I think the large question is going to be that And for me, I was thinking about ever since we started discussing this topic. I think the question is going to be, offline is always about um, uh, two things. Okay, one is assortment in the retail environment and velocity in the retail environment. So, and in large SKU businesses like Mamaearth is a large SKU business. Most brands will typically have large SKU businesses. Large SKU businesses is very difficult to reach that equilibrium. That is, what is the assortment for a modern trade versus a general trade? Even general trade is very tiered. They basis urban, rural versus square footage of the store, etc. What are those 5-7 SKUs that you can stock there where the retailer will create the velocity for you? Because at some point you will have to depend on the retail environment to create it with the customer. And I think there's a lot of testing that has to happen for someone to reach कि इस दुकान में ये बिकेगा और इस स्पीड से बिकेगा. I think it is a test and learn kind of a thing, and you don't get it right in the first go, second go, third go. I think unlike online environments where there's a lot of A/B testing, you can do it very quickly. You can't do that in offline. I think learning cycles are just a lot longer. So I think they're in that phase right now where they're figuring out what assortment and velocity sweet spot is for all of these stores. And that's where I think they will start figuring out what are the value pools for them eventually, and that EBITDA will. The thing about this is that EBITDA will smile upwards very slowly at a quarter-on-quarter level. It won't happen the way you can optimize for an online environment, and that's just where some amount of patience from a shareholder or board standpoint has to come in.
Yeah,
you can't learn this stuff.
What does this say to the new age brand today, which is at 500 crores and looking to scale to 1,000? I think we should look at, I think the company, I'm sure phenomenal management, they'll figure out how to grow profitably from here. I'm sure they have a playbook. They have executed flawlessly over the last 8 years. There's no reason to believe that why they'll not do it over the next 8 as well. But on this pod, at least we would want to analyze a little of the second order effects of understanding what has happened in the last week and sort of playing out what does it mean for new age startups today who are trying to build D2C brands, or entrepreneurs who are looking to build D2C brands, or expectations that we need to also set in terms of potential size that you can create if you're building a D2C brand. Is there a limit?
I'll just add to it before Revant we deep dive on this. That, what you are also mentioning, what is the need, or let's say the higher goal is, can we get to growth as well as growth and profitability at scale, right? And if we are saying, okay, online gives you scale, but is not as profitable, traditional companies have proven that offline, at least the playbook is set, and if it works out, then it's profitable, right? What has worked, let's say, for many companies, not only Honasa, is you look at, any D2C brand, when they start, they'll start with some number of SKUs, right? And then they'll figure out online as a channel and they'll start selling. Most of the cost is variable, right? As against fixed. And then the third lever which people have exercised is, okay, I know how to make products. I know how to sell products online. The third one becomes, can I do more brands, right? Over, let's say, more other channels which are offline, MT versus GT, MT and GT, right? And people have successfully scaled. You look at your both cases, you look at Honasa, you look at Fable Street, you look at Tomorrow, all of them have multiple brands now, and all of them are starting to do offline. And that's one way, by the way, to scale. And but that still doesn't answer, and where we should go deep down is that it still doesn't answer that even with 7-8 brands, do you do it profitably? And then if you are able to do 8, what stops you from doing 15? Is it that market is capping out? Are we, overcrowding the space? Is it a penetration issue? Or, it's just that, you feel that, okay, I have now 7 brands that will continue to increase. Maybe the push is to go out and do MT and GT. And by the way, I also want to ask you guys, do you know any brand, any beauty brand, which has successfully done MTGT in India?
Yeah. Before answer that question, Chirag, I would love to at least point out one thing, that value creation, like if you go back to the last 100 years, value creation will happen when you have, whether it's one brand, you have hero SKUs, whether it's one business and multiple brands, you have hero brands, where there is massive scale in at least one or two. right? If you have 5 or 7 or 10 brands and all of them are sub 500 crores, it's very difficult to actually generate 15%, 20% EBITDA, because in the end, scale economics do kick in as well over time. And customer love ideally should get 1 or 2 brands to a very high level. Even if you look at our bellwethers of the last 40 years, they are very proud of the brands that are 2000 crore plus, because they are fundamentally the revenue as well as profit drivers for the business. Smaller brands essentially would always require more investment to grow and therefore would not be driving that amount of EBITDA. So it's very hard to defend and consistently compound a portfolio of 15 brands, in my opinion. And hence, the larger question is, what is the total? Like, you may have 5 brands, 7 brands, 10 brands, but what is the total size that each brand can get to is a very important metric for businesses as well as investors to get to answer.
No, absolutely agree. And I think at some point you'll have to see these brands totally separately. But I think for our viewers, right, it's important. I think it's very important to make a distinction. People think that going offline is a function of scale. Okay. That from here to here we'll do online, from here to here we'll go offline, right? I think it's also a function of, it is more a function of brand tenure. Okay. So what I think one of the reasons why going offline is so value accretive to businesses is not because you can reach as many customers, but it is because you can leverage distribution a lot more to create more value for yourself. For example, you're talking about customer love, right? In my view, customer love for a brand is defined by 2 things. 1, absence of said brand creates discomfort in customer. And 2, no one else can copy your brand proposition easily. If you have achieved these 2, then over a period of time, you will build out customer love at scale. Now, if you have that product or that brand, let's say Maggi ho gaya, right? Maggi mein customer love is high because customer feels discomfort without Maggi as a snack and nobody else can copy Maggi. Now, if you are Nestle, you can go to any distributor and say कि boss, मैं आपको 5% margin दूंगा या 6% margin दूंगा, करना है तो करो, नहीं तो I'll find 10 other people to do this business. And that's why as a brand, you're able to capture a lot more value, which is why your EBITDA multiples are 20-25%. Right? But if you are still growing, you're still figuring things out, you don't have that leverage. So that 20-25% you have to start giving out to people, where you can't do this with an Amazon or a Zepto or a Blinkit. Ki boss, 6% mein do, nahi to main kahin aur ja raha hu, because there is nobody else. So building an online business, when you have not figured out customer love yet, they're two equally difficult tasks. That 1, you have not found customer love at scale, and B, you don't have the leverage with distribution. So this EBITDA at scale is not a function of economies of cost. It is a function of tenure of brand. And I think that is where founders and, brand builders have to really think hard about, kind of doing this now with not only one brand, but doing it with 5, 6, 7 brands in different tenures. It just adds a lot more complexity to your thinking. Like for me also, running 2 brands is very complicated. Like I have to think differently. Like it's a non-linear problem.
Yeah, I think that's a good point, but I'll put some caveat on this, Shantanu. Even if you have customer love and you have amazing pull, in the end, you have to understand one thing, that by design, if you see the chart showed 55% plus on general trade, right? For beauty and personal care, and the larger FMCG is similar. Close to 60% of revenue still lies in general trade. The ability for a Unilever to negotiate or a Nestle to negotiate with general trade is very different, because they've sort of built distribution as their advantage. We again covered this in the last episode, right? If you are a new age brand today with customer love, you will definitely get a lot of scale and better EBITDA than someone who doesn't have customer love. But long term, your ability to generate margins will keep going down if you're not there, if you don't have leverage over the channel. And nobody has leverage over Amazon.
Correct.
Or a Blinkit for that matter, right? Because in the end, retailers, and this is very true in developed markets like US, right? Where the retailer, it's a very, very, very evolved retail market. And the retailers are as strong, if not stronger than brands. You may be a great brand, but if you want to go to Costco, you will have to align with what Costco needs, right? So as India becomes more evolved in its retail behavior, and we could see in the chart that overall GT has been losing market share for the last 5 years and continue to happen. We again covered how quick commerce is eating into e-commerce, modern trade and kirana as well, which is largely GT. So if you play this out the next 10 years, the retailers will keep getting stronger. India will evolve to a more retail friendly market, organized retail friendly market,
Organized retail.
which actually reduces the leverage that a brand has, right? Because in the end, retailers will always have options of 3 brands in the noodle space that all have customer love. Because we were brand starved before, and the proliferation of entrepreneurs as well as investors in this space is very distinct in the last 4 or 5 years and will continue to be high. So I think the broader question around profitability is stemming from there, that if you are operating on an online channel where you have dependency on Meta and Alphabet, if or a Amazon or a Flipkart or a Nykaa, then subsequently on a quick commerce retailer who's also organized retailer, or modern trade, which would be Reliance or DMart, effectively your ability to get higher margins there was always suspect.
Yes.
Even for Unilever or a Colgate, the largest and the most profitable channel is GT.
Right?
They have leverage there.
It's not leverage. It's fragmentation, right? So if a distributor will
Leverage, no? If I'm negotiating with 1 lakh people separately, each of those individual 1 lakh people don't have leverage over me.
Correct.
And that's a simple difference, right? Which is why it's the most profitable channel. Which is why everyone wants new age brands to also say, can you go into GT? Because that is the only profitable model, even for, I'm not saying only, the profitability even for larger brands is higher in GT than in other places, where the retailer has some leverage. Great. Therefore, by design, going back, do you stay only online or online and make lower EBITDA, or you force your business to go to GT and to just in that chasing that scale as well as EBITDA is the larger question.
No, but you can't go offline without customer love. So just because there is leverage doesn't mean you can go offline. You need assortment and velocity. No, so that leverage doesn't exist. The reason why leverage exists for a Dove in a dukan is that Dove sells itself. दिन में 10 customer.
What I'm making as a point is, even if you have customer love, broadly, if you don't go to GT, even if you have customer love, you will not actually make 20% plus EBITDA margins. That's a limited point.
That I fully agree.
So we are saying that it is essential to go to offline if you want to make a profitable business at scale. What Shantanu said, and I think we discussed it last time also, that is there enough customer love? Is there demand pull, which you have reached as a threshold, and then you go, right?
No, sorry. Chirag, slight nuance here. The quantum of profitability, I think you can definitely build profitable businesses only online as well. It's just that the quantum of profitability that you want, do you want to be a 10% EBITDA business or a 20-25% EBITDA business, is the question that people have to answer in their minds, in my opinion.
But Revant, I would also then double click here what you said, that long-term view even on GTMT is that India is moving towards more retailers like Tesco, Costco, etc., which are going to then further negotiate. So is, profitability on offline channels also going to become like 15% over time? Not now, but as this fragmentation reduces. Right. And that also means that, by the way, India trades at a premium on consumer brands, right? I remember 5 to 6x on revenue, whereas brands in US trade at 2 to 3x.
So we may look at revenue multiples to simplify it, but broadly it's an EBITDA multiple play, where ability of brands to create more than 15% EBITDA in the US long term sustainably is always going to be hard, and therefore the valuations that they trade at are a little lower than what we get in India. And in my opinion, if a new age brand is okay to accept that it will be a 10 to 15% EBITDA business only, there is nothing wrong in building out a great brand with customer love, staying online or staying with organized retailers instead of trying to maybe, if you can go into GT, absolutely should.
Then we are saying for anyone who's starting a new brand, we know that all online commerce channels work. They scale, maybe lower or definitely lower profitability at the moment. EBO works. So EBO works, but we are yet to see someone crack GTMT at scale.
Yeah.
Right. So that's
EBO also assortment. Yeah. EBO also assortment is important. So for us, EBO did not work until we had trimmers and fragrances. आप razor और shaving cream नहीं बेच पाते वहाँ पे. So assortment is very important for EBO also. Because fixed
But
overhead
are
is
you
very high.
doing EBO or are you mentioning to shop in shop?
No, EBO. Like airports पे दुकान है या फिर खुद का दुकान है मॉल में या फिर there's a EBO again because you can't sell 100 200 rupee products. You need high OV products because end of the day there is geographic concentration of your customer footfall. And that's the thing with offline. Like in general, you have to appeal to a geographic locality which is in one place. Which is why things like regional tastes is a big plus if you're doing offline. कि ठीक है, if I know that my product is going to appeal to, let's say, the demographic in Bangalore, then I will stick to Bangalore and build it out there rather than kind of doing it all over. But if you don't have, if my assortment does not have a regional, I don't think even Revant's assortment necessarily has a regional pull. So for us, I think getting offline right is very difficult. You have to really put thought in it and say, यार कैसे करें? Because cut ही नहीं है उसमें. Concentration of customer कैसे ले आएंगे अपन?
Actually, the bigger takeaway for me, Chirag, is that if you're building a one brand or a multi-brand business, you have to be very, very, very capital efficient and get every brand. Let's say you're building a one brand business, you have to actually be profitable by a 300 crore revenue business because fundamentally your ability to scale into every channel will be suspect because you will have to get a revised PMF. Like every channel have its own nuance. Now you could take a step and say, if your entrepreneurs are building for the next 10 years, and this is a contra view that I at least like, which is that if online commerce has gone from 10% to 20% in the last 5 years, and you play this out and say it's going to be 30%, then the TAM is large enough for you to remain online only and continually build. And maybe in 10 years, we'll have 1,000 crore brands that are online only. I think it's a distinct possibility. But then you will have to align with the fact that it will be a 10% EBITDA business, 15% CM business. And if you can get to that by 300, 400, 500 crore revenue for the brand, then it will stay there. Because as you rightly said, all costs are variable. Your ability to build leverage, there is no fixed leverage that we can sort of say that, okay, now this is fixed and I'll keep scaling on top of this, right? Every order will have a warehousing cost, delivery cost, some marketing cost. There will be some channel efficiencies, but broadly, you can build, I think, 1,000 crore brand with 10% EBITDA online only in the next 10 years. So I think that's a distinct possibility. So, but you have to either choose that route and model the business that way, or you have to say that, no, I will have to do this. Then your design choices become very important when you are doing
that's very interesting point which you're making. And I'm sure the table which you showed us, if I were to make a cut on that let's look at only premium segments, I'm sure then the GTMT reduces.
Absolutely.
Right? And it gets very tilted to online channels. Maybe, and this also takes us to the, we keep discussing that is BPC overcrowded, is there space? One is the secular shift to online. I want to show one more data point, which was, just let me present. So look at the first chart. This is consumption per capita beauty only. India is half of Indonesia.
Yeah.
US to bhuli jao.
Yeah.
Right. So if anyone is saying, are we, do we have space? Is this market continuing to grow? We see so many brands, working with us. And also, by the way, another stat, while D2C is growing at around 40% CAGR, beauty and personal care is the highest growing segment. It continues to grow at around 65% CAGR.
Yeah.
So that data point plus this data point, there is room. And I think the below chart is also interesting, which shows BPC per capita also follows a S curve. Right. So India is right here at the bottom today. And as GDP per capita increases, we are today at 2,500, 2,600. Right. It is said that this is going to further go up in a S curve way. So all of these things indicate that beauty is definitely all set to grow. So there is going to be room, increase adoption in online, GDP per capita increasing, beauty expenditures will increase. We are far lower on consumption per capita. So all of those at least markers indicate that it's a great space to build. What we have been discussing, what's not clear is that how do you scale it on GTMT? What you said, Revant, I think is a great one, that do you make a choice today that I'm going to build in 10 years, I'm going to build a online only 7-8 brand business, even if that results in 15% EBITDA today, which is real. But I make, some design choices through which I get that 15 to 20 to 23 is a probably a legit goal to have.
Yeah. I think that I agree with you completely. I think the way, if I were a founder starting today, right, and I think if I'm going to have a long-term GTMT goal, and I think I should, that's where the belly of the market will continue to be for the foreseeable future. One of the most important and I think underrated elements of offline success is the presence of hero products. And we all say that hero products are important because, because they're easy to sell. But one has to understand why it's easy to sell. So when a Colgate salesman goes into a store, he knows that 80% of his business is going to come from one SKU, which is his Colgate dental cream, the basic one. तो वो दुकानदार को पूछता है कि ये कितना है आपके पास और ये मेरे पास आई एम गोइंग टू बिल दिस मच टू यू, बाकी आप ये 4-5 चीजें भी तो देख लो, टोटल भी तो देख लो, मैक्स फ्रेश देख लो, ये देख लो. एंड दैट गिव्स हिम दैट अथॉरिटी फॉर कन्वर्सेशन. द रिटेलर नीड्स हिम. For new age brands which are used to selling assortments of large number in online, like for me to go from 300 to 1000, I have to think very hard ki what are my 500 crore products in the next 3 years. If I have 500 crore products, then I have a successful offline strategy. If I don't and I have a spread of SKUs even online, अगर मैं 10 साल और बना रहा हूँ online, 15% EBITDA बन गया, 700 crore का धंधा बन गया, but that 700 crores will not scale offline unless I have those hero SKUs that will create pull for my salesperson when he goes and talks to a retailer or a distributor. I think that is the thing that, like, we did not build that from day one, and I wish we would have. We have started doing it more recently now. But everyone says hero products or hero brands, but yes, hero brand, but within hero brands, even like if you look at Maggi, they have a very clear sense that that 2-minute noodles ka pack of 4 is probably the 70% delta creator for their salesperson, whichever environment it is. So I think that is where we need to keep innovating, building for founders ki boss, if I'm going to build 1,000 crore business, मेरा 3 प्रोडक्ट जो 100 करोड़ पे जाएगा और 2 प्रोडक्ट जो 200 करोड़ पे जाएगा, कौन सा है आज के रेट में? I think Foxtail, for example, has done a good job there. I think they have some high flying similar skills.
Interrupt you there, Shantanu. I just want to put you guys on the spot and show this again as a summary chart, right? If your EBO plus vertical e-commerce plus horizontal e-commerce plus brand.com has gone from 10% to now 22-23% in just 4 years. If I play this out, this will become 40% or so in the next 10 years. 40% of overall FMCG spends. But if I actually take the cut of only premium, unfortunately, I don't have that chart right now. We'll try and pull it up before for the final cut. I think on the premium side, already 40-45% of spends is happening in the non-GT, non-MT space, right? And that, in my view, will go to 75-80%. And most brands today can't operate at the Maggi or the Colgate price point because it's designed for GT and MT. See, that's why I'm saying your business design choices are technically also channel choices. If you're building a premium cookware brand today to compete with prestige cookers, and you're going to say that I'm going to make XYZ better products because there are these benefits that will come with this better for you product, which is 2x the price of prestige, that customer is now predominantly shopping online. So I could actually make a case that why do you even need to go to a GT or a MT if you're building for the next 10 years? Because the premium customer is not going back to GT or MT.
But the issue there is, which one is quick commerce in these rules? Is it e-commerce horizontal?
It's in the e-commerce horizontal, correct?
Horizontal, right? Because that customer behaves like an MT customer a lot more than he behaves like a D2C or a e-com.
I don't disagree on the fact that you need customer love, you need hero SKUs. मैं वो नहीं बोल रहा हूँ मैं बोल रहा हूँ pricing and positioning. It design choices. If you're designed for the premium customer, I don't think that product will ever make sense in a GT.
मतलब वो जो शांतनु आप भी बोल रहे हैं ना कि 5 प्रोडक्ट चाहिए. You were also saying that you need 5 products on which you have insane love and then you think about. Now, at least my realization also is when you're selling online, the price points are different even if, let's say, you're selling a face wash. For GT, you have to completely change that SKU and then revisit the pricing, revisit that positioning and then launch. It's like actually doing a 0 to 1 again. And this is like, what we said, that high fixed cost. So the cost of doing everything is expensive, or the cost of mistakes is expensive. You were saying that GT, you have to do national. How do you do that? Isn't it better that, then as a businessman, that, you decide that, okay, there is a tailwind. Let me do something premium. Tailwind, ride the tailwind on digital channels and create a good, what we were discussing last time, that we see a legit possibility to creating a 500 crore online only brand today.
Correct.
Right? Which is going to increase with all of this.
Yeah. So I think there the clear answer that has to still come. I think today we can see a potentially 1,000 crore online only brand. We've already seen it in the past. We will see more of them. It's just that the EBITDA that we will make on these channels will always be something that will be much lower than offline, because there is the non-organized retail offline. And therefore, by design, should we start underwriting lower EBITDA outcomes for consumer brands overall as an ecosystem, just to bring to that situation where we don't have an expectation mismatch? Because
absolutely.
I would love to see a situation where an online only brand makes a 25% EBITDA, but that doesn't look to be a reality today. I think everybody is very comfortable to underwrite a 10 to 12, max 15% EBITDA for an online only business, because there are all monopolistic businesses on each sides, right? Whether it's a Meta or a Google or an Amazon or a Flipkart or a Instamart or a Blinkit or a Reliance or a DMart. Fundamentally, the retail / distribution touch points that you will still need, unless you're a pure brand.com. And that would be, I would love to at some point of time, and I'm sure there are some of them exist, because Lenskart for me, as an example, while it's a retailer, it's also a brand. And the reason that business can make 25% EBITDA is because backward integrated, 2,000 stores, it's just phenomenal, right? So there will be, but you will have to disrupt along each of these axes, whether it's backward integration as well as, most critically, I think, control of distribution. If it's on your own channel, then your ability to command the margins and make sure that you are able to offset the marketing or A&P costs will be critical. Otherwise, you are effectively leaving a lot of margin for every rent-seeking large monopoly / duopoly out there that makes making 25 a dream, maybe even 20 a dream, 15 is the best case you could end up with as EBITDA.
I love the way you call it rent seeking, because many people don't recognize how much of rent margin actually is. Just time check, Revant, Chirag. We are at 12:30 and we have Ashish waiting, and we have one more topic to cover. So should we dive into that?
Yeah, let's quickly dive into an adjacent topic that I was thinking about. Because, when I was looking at the potential re-rating of the beauty and personal care sector, where people would start saying that instead of 6 times revenue, the real expectation for FMCG / new age brands should be more like 3.5, 4 times of revenue, because your potential end state EBITDA is going to be suspect. Interesting thought that came into my mind is, why do investors look at these potential EBITDA outcomes? In the end, because they are supposed to make 25-30% IRRs, right? And there is a mismatch between what is an IRR that you think you can deliver and what the investor thinks that you can deliver. And if you go down that path, you realize that fundamentally there is a cost of capital associated for every investor as well. So what is interesting to see is that effectively India, which has been taking almost $10 to $15 billion of venture capital, maybe $20 billion plus on average over the last 5 to 7 years of VC plus PE in new age businesses, fundamentally has taken most of this capital from foreign investors. Foreign investors who technically raise from large family offices, endowments in US, Europe, etc. And the cost of capital for these, actually, we may not be able to know what the cost of capital is, but the IRR expectations is usually around 25% dollar return, right? But USD to INR has also been like a 5% depreciation of over the last 15-20 years. So technically what ends up happening is every private investor would want to look at a 30%, 35% IRR expectation in rupee. And that effectively builds that discomfort of maybe giving a lot of good high valuations to even, let's say, new age brands or different companies as such. What was very interesting to see for me over the last 1 year or so, and the most critical topic that we at least saw happening in this week was Zepto raising $350 million from domestic investors. That's a lot of money that's being deployed by family offices, etc. in India now. That pool of capital always existed, but we didn't know that there was so much quantum. And if you look back, Swiggy pre-IPO, First Cry pre-IPO, there was so much domestic capital that has been now poured into growth stage startups, late stage startups, largely. But, you knew that pre-IPO rounds would get a lot of domestic capital, but Zepto would be 18 to 24 months away from potentially an IPO. Maybe we'll get surprised that it'll happen in 12 months, but it's a risk asset as such. And for Indian domestic capital from family offices to actually do such a large investment into a risk asset is something that's very heartwarming to see. Why is it heartwarming? Because fundamentally the IRR expectations would be very, very different compared to a foreign private investor. Maybe Chirag, you can show the chart that you were discussing before. It would just fundamentally align, I think, new age entrepreneurs if this pool of capital keeps growing. So I think this is a great chart. Maybe Chirag, you can take us through it.
We were just compiling yet, what you were saying, that if return expectations of a foreign fund is much, much higher than, let's say, a return expectation of an Indian family office. Why is that there? And then what does it mean for the ecosystem if that capital, what we are seeing in Zepto and then Swiggy, if that capital is starting to flow in? You were just doing some maths. It looks like that Indian family offices should be closer to $300 billion, right?
I mean, I think the AUM has grown phenomenally in the last 5 years because of the capital markets as well. Because I think 80-90% of the family office would be deployed in Indian domestic capital markets, which has just phenomenally given great returns. I think they would have CAGR'd 25-30% in the last 5 years, and the size has just ballooned significantly.
Correct. And, the way at least I would look at it is, let's say, any large corporate would be able to raise debt at like a very fine bank cost and hence, will have a very lower IRR expectation against a international investor. International investor would also want to cover for the currency depreciation over time. So there are natural advantages of, somebody in India who's raising money from domestic capital. One, it has lower expectations in terms of returns. Two, what is mentioned here from a duration point of view, you don't have a fixed 8+2. It is kind of evergreen in nature. My sense is they do understand India also deeply. So their guidance in terms of what works in India, what kind of revenue pools are available, foreign investors would always give us some inspiration that, okay, this has worked in a developed economy. But I think India, of course, throws up like newer things, So at least this table highlights that, what is happening. If that sustains, it means that domestic capital could be a real legit pool availability which Indian entrepreneurs could use over time. I think this allocation is increasing. We don't have any numbers in terms of, okay, is this percentage on percentage year on a year increasing? It looks anecdotally with the way pre-IPO participations are happening that it's increasing. I think it's going to come down to growth stage equity as well. I'm hearing that, $5-10 million from a family office is much easier these days as it was like 3 years ago. So all of that is getting available. Bodes well. And Revant, to your point, maybe then it leads to that if this kind of capital is available for a longer term, does it lead to higher multiples over time?
I don't know if it will lead to higher multiples. In my view, Indian family offices is usually first generation or second generation entrepreneurs who have created significant market value or sold their businesses over time. And so they understand how to build in India as such. In my experience of speaking to founders who have actually raised from Indian family offices, actually it's reverse. Even though their IRR expectations would be lower, they are far more pragmatic on knowing that how difficult it is to scale in India. So to give you a very simple parlance, if you gave a base case that I can grow 30% over the next 5 years, maybe venture risk investors would take a haircut of 20% on that, but the Indian family offices would say that, beta, हमने धंधा बनाया है India में. Let's not be over optimistic. Let's take a conservative stance because it takes, and especially if you take the time horizon into view, right? They actually value a 10-year 20%
So they are taking a longer term.
30% compound.
Correct. They are taking a longer term because if I do like to like discounted cash flow over a lower cost of capital, it should lead to a higher enterprise value, right? And hence a higher multiple. But you are saying that they are saying, okay, one, maybe the terminal state of EBITDA is not going to be the same. We understand India well. Two, you are not going to be compounding at like 50-60% year on year. Maybe the realistic answer is 30%. And hence, the outcome is different.
Yeah. But they are also pragmatic and at least guiding, at least that's what I've heard from the few founders who have raised from Indian domestic family offices, that they're very pragmatic and understanding once they come in as to how to exactly build, right? How to build for long term. Because I think the biggest pressure, if you leave out the IRR, let's take the cost of capital aside, right? I think what would be best for any entrepreneur is patient capital. There is a reason why blue chip investors pride themselves of working with the best entrepreneurs, because they keep talking about how patient their capital is. Like there's a long only capital and there's a short term capital, right? Like for example, private equity folks who want to deploy a 50 million check would say that we have a 5-year cycle of in and out, right? Now that puts pressure to make sure that you're optimizing for those 5 years. Now, as a founder, you want sometimes to take a 10-year bet on something, which may impact your 5-year plans a little bit. And that therefore is an inherent conflict that happens between, let's say, a founder who's thinking 10 years and a CEO who's supposed to solve for shareholders for the next 3 to 5 years. So just from an alignment building perspective, if you ask me, even if, like, I would actually encourage entrepreneurs that even if the valuation offered by a domestic capital is lower than maybe a short-term foreign capital owner, it would by design be better alignment for the founder to build out over 10 years.
Yeah. Another thing, I think the advantages are very clear in terms of runway that it provides. And second is when there's an entrepreneur who's built out their own business, they by design will have long views on not only their own businesses, but their investments and hence your business also. But just the other thing that I really, we have investments from family offices as well. I think the big ones have really professionalized beautifully, right? There are CIOs, there are large teams, there are analysts. It's a very professional setup. But that's just the top guys. I think as the family office system matures, one worry I feel is that the ones that are kind of getting there will be a certain amount of maturing that will have to happen. And again, if you look at a typical family office deployment strategy, right, 80% will be public markets, mutual funds, PMSs, some real estate assets and so on. And 20% they will kind of keep for private assets, entrepreneurs who are raising capital, Series B, Series C, all of that, right? So then now what ends up happening is when you have an investment, when a family office that does this, then there is exposure to public market volatility. So this, if you have deployed 100 rupees and 80 rupees is in public market, that 80 comes down to 60. So as a CIO, you will be like, okay, now these assets are depressed. I want to find liquidity elsewhere and kind of overinvest here. Or this now 80-20 ratio has become 60-20. So I want to kind of make it 65-15. They will not find liquidity in private markets at all. And that makes that the mental models that these investors have are not attuned for illiquid assets which have so while you might have long-term views and so on, you will have to be very comfortable with the kind of risk you're taking, even if it's a small part of your portfolio or it's only 15-20%. And I think that's where the maturing of the family office system at scale, I think the big ones have got it right. They've been doing it for 15-20 years. But the mushrooming of a lot of these 200, 300, 400 crore family offices, which is newer money, etc., I think is an important one. So and I think we'll see it happen over a period of time, but it might, it'll be important for entrepreneurs and family office investment managers to kind of really align expectations as to what this means from a risk allocation and capital allocation standpoint. कि liquidity मिलेगा नहीं जब आपको चाहिए कि मेरा बेच दो या फिर I need something out. Companies can't do that easily.
Yeah.
While there are
fair point, Chandru, but my understanding is that the first wave of private investments done by the large family offices has already happened in the last 15 years because they were LPs to almost all domestic capital.
Correct.
Right? Every VC / P that has raised domestic capital in India has most of these family offices as LPs over the last 15 years. They have now seen 3 to 4 cycles of money going in and how exits happen, which is, I think, is what is giving them the confidence to now start doing direct investments as well, because their access has increased, because now they're able to cut 5 million direct. See, if I have only a 10 million allocation or a 20 million allocation to venture and private equity, they would have done it too as LPs of, let's say, 2 to 3 million each in, let's say, 4 or 5 funds. But now that they have $100-200 million to deploy in venture and private, apart from being LPs, they can start putting 5 million each in different startups, because, and that keeps going up, right? Because by design, their ability to get 12-14% 5-year CAGR on their public market investments is uncanny, right? They are serviced by the best. I mean, the CIOs are either the best or they are serviced by the best guys to make sure that 12-15% compounding keeps happening, and therefore that there will always be a short-term liquidity. You're right. But yeah, maybe you're right. We have not seen a market crash that has happened that has maybe concerned some of these family offices to say that, hey, we are there's an asset liability mismatch right now in terms of our ability to deploy money in public is low because we don't have enough side cash.
Yeah.
And maybe some surprises get thrown off there. But at least today looks like most family offices are becoming very, very, very good alternate sources of capital for startups that don't need significant amounts of capital. Like if you are near profitability and need 5 million, it's a great source of capital.
Do you think that, I think when we were preparing for this discussion, someone said, I think Chirag, you said it, or that you know that these family offices will now start competing with the investors that they have in their LPs in?
I think that anyway happens as the market matures. See, you have to understand that the venture ecosystem is about 20 years old now in India, right? As the ecosystem matures, you will continue to have more of the LPs starting to do direct investments as well. But it will never get to a situation where all the LPs are competing, right? Because it requires a very distinct professional setup to do private investments. Second, you have to understand this. The amount of time that goes in to actually make the right first source, then pick, make the right decision, and then get an exit in a private investment is a lot more than actually what it does for a public investment, right? So what ends up happening is if my 80-85% of my capital is anyway in public and bonds, etc., your time focus, your time reward on time is always better there. And you have to understand that wealthy people value time a lot more than money. So by design, their teams will also spend a lot more time there versus this. So I don't think the competition will ever be such that they will become materially larger than the venture guys in India. That's not going to happen. I think the reality...
Yeah, my sense is they are going to, what you're saying is they are going to co-lead, co-invest with their funds. They're not going to lead or set a price. We don't see that happening at least. And that's how it is traditionally also, you know, our foreign LPs also, US LPs also, they typically, you know, with smaller funds, they would want to co-invest. That kind of structure will emerge. But I also wanted to ask you guys that outside of, let's say, they won't give valuation, etc. Any downsides for from raising from a family office?
Shantanu is the only one who's raised here from a family office, so maybe he can give some, at least from what I understand, if any. Yeah. GPs I know. GPs are general partners of venture capital funds. And a lot of the smaller funds or the domestic funds have raised from large family offices in India. They at least have only good things to say, because I think there's a distinct advantage of understanding India that actually is very helpful to the entrepreneur, whether it's in retail, whether it's in distribution, whether it is opening doors, whether it is policy, whether it's regulatory frameworks. There's just phenomenal value to have someone on your side who's built a business over the last 50 years and knows everybody in the ecosystem. Like, your ability to learn from those individuals is just invaluable, right? I mean, it's just invaluable to have them on your side if you're able to get their time as well. So I don't know what the potential downsides could be, but if you're saying it's patient capital and it's risk capital that is well understood, it's maybe the slightly lower valuation or them not setting a price is the only concern I see there, at least for today.
Maybe it's a little bit of borrowed conviction. They don't have self-conviction. They rely on somebody else and co-invest. Maybe that's one. And they might not be able to double down, let's say, in case the company is not doing so well. But yeah, go ahead, Shantanu.
Sorry, if I can also add to that, Chirag, I think it's not about conviction, it's about time again. See, if I have a $1 billion public portfolio and I want to put 100 million in direct private investments, I can't take board seats and spend time to course correct and help an entrepreneur make sure that they're going on the right path, right? I can't, the fiduciary responsibility for a board member is significant, right? So that then requires a lot more time commitment. My view is the reason they love to co-invest is because they're relying on their co-investor to do the diligence, financial, legal, compliance, all the hard lifting that goes in. And there's a lot of hard lifting. All of us are VC backed, so we know how much effort portfolio services has from recruitment to legal to finance, etc., to make sure that the governance is going in the right direction. And I think that therefore requires them to ideally work with someone who's going to do all of that heavy lifting.
Yeah, I also feel like family offices. There are two very so venture capital, for example, private equity will give you like breadth of support as an entrepreneur, right? They'll connect you to 5 entrepreneurs who've done this globally. They'll have a very structured point of view in a board meeting. They have people who'll help you with that. I think what Revant is saying is absolutely right. We have raised money from Patni family office, and again, super long view. Selling is never, or returns is never on the horizon at a short term level, and we have access to people who actually build businesses. So the difficulty of the emotional turmoil of going through downtime, for example, is something that a professional investor sometimes is not fully able to kind of empathize with or even fully able to help you with. But someone who's been there, done that in the trenches for many, many years, I think the perspective is a lot deeper. So there is wisdom on both sides. I think that balance is great from a personal point of view.
No, excellent discussion, guys. I think we should look forward to the time where at least as India's first, second generations become more and more wealthy, their allocation to help the next generation of entrepreneurs through private capital continues to increase and provide that alternate source of. I think the best thing that has happened, honestly, is I think we've been trying to get the inequality of long-term capital gains tax solved, and that got solved in this budget where private investments held for long-term used to attract a 20% long-term capital gains tax plus surcharge, which has now come down to 12.5%. I think we should acknowledge that also has enabled a slight shift, because now if you hold a public stock for more than 1 year, it attracts the same tax on the gains as holding a private stock over 2 years. And that, I think, has also led a little change, in my opinion, from Indian domestic capital to start looking at the private asset class more favorably.
Absolutely. That was a fantastic discussion. I think as we segue to the next one, we'll be inviting a special guest for a topic that is hot. But Revant, Chirag, I think talking to you guys always is tremendously insightful and learning for me. I think asymmetric का एक फायदा तो ये है कि खुद सीख लेता है बहुत कुछ. But yeah, we're going to take a quick break and we're going to come back on topic 3. So yes, welcome to Asymmetric Section 3. And today we have a very special guest, someone who I have admired from a distance, and I've also been had the privilege of becoming a friend over the last few years. Founder of Urban Ladder, and now building in the climate tech space, and someone who's been reading and kind of researching the climate space for many years now. Ashish, welcome to Asymmetric. And the context of why my background has changed is because yesterday I just took a one-way flight to Pune from Delhi without a return ticket, which is something strange for me. I've never indefinitely gone to a location since I can remember. But I think the reason was that it was almost becoming, I had an asthma situation in Delhi last year in December for a month and a half. and the pollution situation. Everyone is reading on the papers. People who are living in Delhi, the 1.52 crore people in Delhi, and also broadly North India have been suffering for many years, and at this period it goes in peak. And there's just a lot of chatter. There's a lot of discussion. There's a lot of solutions being thrown up. Everyone kind of is seeing second order effects of it. But we wanted to kind of bring you in and kind of have a discussion about what North India actually kind of suffers, not only during this time where it becomes very palpable, but throughout the year for many years now. And how do we think about it even? Like, because it's such a complex issue that even thinking about it is very hard. So that's why I wanted to kind of invite you, and hopefully our viewers will also kind of, those in Delhi and outside, will get a better sense of the problem and effects of it.
Before you step in, Ashgoop, actually, thank you for taking out the time. Would love to hear your thoughts, but add a little broader point. I know North India and NCR goes through this every year, but in Bombay, I don't see it being that different. We are always at 150 to 300 AQI. It gets to 250, 300 in the winters, and it's rest of the time it's 150, 200 at all points of time. It seems to be, apart from maybe Bangalore and Hyderabad, a lot of the high dense tier 1 cities seem to be facing this problem. And even beyond the NCR issue, is there a fundamental second order effect of having such bad air quality for where at least most of the white collar jobs, a lot of the value creation industries, offices, etc. are today? And would love to hear your thoughts on what do we have to do at a broader level as well, and what's the second order effect of not just NCR facing this, but broadly a lot of Indian cities being in this mess, and how do we actually potentially think of coming out of it?
Got it. Yeah, so I'll just quickly give a little bit of context about myself outside of the professional context. I grew up in Ghaziabad, which is now a part of NCR. So basically, we have got upgraded. Our origin has got upgraded, and my parents continue to stay in Noida. Parents, sister, basically extended family. Everybody is in the NCR area, and travel there. I was there last week, all of last week as well. Our work also is centered around NCR. While I stay in Bangalore, so the problem is obviously as much personal as it is sort of academic in that sense. Now, see, I'll start from a slightly different point. I used to travel to China a lot in 2005, 6, 7, and then again a lot from 2013 onwards. And what we saw in China in 2005, 6, 7, when it was just going through a crazy industrialization plus construction phase. Actually, it was insane. I remember taking photographs of Shanghai and some of the industrial towns, Suzhou, Harbin, back then, and it was quite crazy. Actually, you could just see cranes all around, hauling stuff, lifting stuff, building stuff, and you could, see just mottled skies. Something very similar to what you see in Delhi now when you land and through the day on the bad pollution days. And now if you go to China, pretty much most of the cities, of course, Beijing was the worst. And I haven't visited Beijing of late, but when I went to Beijing in 2006, 7, it was quite insane. But it was not just Beijing; it was pretty much all over China was like that. And now if you go there, it's pretty good actually, by and large. Even in Shenzhen, Beijing is also pretty okay. Shanghai also pretty okay. A lot of greenery, and so one way to look at it is that a better world, a better sort of environmental situation is indeed possible. And of course, China manufacturing growth story has continued. It's not slowed down. Now, if you come to India, we absolutely have a problem of pollution all year round. Okay, the air pollution, the air quality is bad all year round. It of course gets in the few months of the winter months. It does get, of course, aggravated, and it does get aggravated because of a few factors. Interestingly, I think the supply side factors of that air pollution are actually the lesser reason for that aggravation. The larger reason for the aggravation are the climatic factors, which is cold sets in. It doesn't allow the pollutants to escape, and so on and so forth. At least, or if you believe all the studies, and now the studies are starting to become more aligned with each other, all the academic studies, the parali issue or the burning of the crop residue issue is broadly speaking seen as a less than 10% of the aggregate air pollution impact. People have estimates from 4% to 10%, give or take. Right, that's broadly seems to be the picture. Okay, now, but the underlying, which is basically your mobility pollution. Yeah, so parali is sort of 4 to 10%, let's give or take, and really speaking, the heart of it is your mobility led pollution, which is basically exhaust tailpipe emissions, and a lot of it is your construction linked, right? And the third is, generally speaking, we all of the NCR, all of this area is basically the alluvial plains, which are historically, of course, fine silt, deposits. I mean, we've always, when we were growing up in Ghaziabad, also, you always had dust all over the house, right? You were just, frankly, cleaning and mopping all the time, and that's just reality. Now, so that's the problem we have in Delhi. Which obviously becomes more acute, right? And there is a issue of PM10 and PM2.5. The nuance there is that while theoretically construction waste is PM10, but over a period of time, construction waste of PM10, when it actually stays enough, it obviously degenerates to to smaller sizes, right? And PM2.5, just to technically, PM2.5 is what is worse off for our health because it sort of, goes down deeper into our lungs and our system. Net, one part is that there are multiple things which are causing what's happening in Delhi. That's one part. Second, thematically, this is a problem that can be solved, but the solutioning is hard. Third is that, all our cities suffer from this. And I think it's important for us to remember that, these are very large cities. If you look at, what is impacting Delhi pollution, right? The full population block is a give or take 10 crore population block, right? You have the Delhi city, which is about a 3.5, 4 crore kind of number. You have NCR, which is, when you look at Greater Delhi NCR, it's about a 7 crore kind of number. And when you look at neighboring towns, which also impact the pollution in Delhi, air pollution in Delhi, that, you give or take come up to a 9-10 crore population block, which is, think about it, right? That's a very, very large part of India's population. That's a very large number. So any solution can't be easy. So yeah, I mean, that's, I think, in the broad top-down view of it.
All right. But tell us, Ashish, while we understand the potential reasons are not just maybe crop burning or maybe just the pipe and there's industrialization, construction. There are like 7 different reasons. I was looking at this data point that overall we are sort of losing 3-4% of our GDP to air pollution, right? Which seems quite a significant impact, right? In that sense, it's almost like $100 billion of cost to Indian businesses just because of air pollution. And there are multiple reasons why, right? Whether it's employees not being able to function at that level or going from that to fundamentally a lot of other issues. So because you brought up China and the fact that the growth did not slow down, but they managed to clean up their air, right? Without really suffocating the overall consumer economy. Consumption has continued to rise, GDP per capita has continued to rise, but pollution has gone down. Whereas if you see what happens here is fundamentally employee productivity becomes a problem, retail footfall becomes a problem, tourism becomes a problem, health costs become a problem, right? Asset creation in terms of becomes a problem. So then, in fact, something as simple as productivity for solar panels for generating electricity, like there are just so many second order effects of air pollution, right? And the top cities in India just become lesser and lesser competitiveness. Like the competitiveness is reducing because of air pollution. How do we actually continue to grow at 7% while solving this problem? Is there any thought on that?
See, I think one part which really is the elephant in the room. I think for us as a country, we have no running away from one structural problem we have had ever since the last 50 years. That we basically, outside of the 5, 6 or 4, 5 cities, we haven't had any, basically our tier 2 and tier 3 cities haven't really powered up and become centers of growth, right? And that arguably is, more investment is required in those cities, big structural blocks of infrastructure need to be plonked down and so on and so forth. But I was having a conversation with somebody a few days back where, we were just chatting it. We literally have created, Chandigarh is an extreme example of literally the only big planned city that we have created. Now, of course, in some of the cities we have created, infrastructure blocks and so on. But that we literally need 30, 40 new centers of growth. Again, if we just compare back to China is basically, if you look at the manufacturing block, and the manufacturing block is, of course, there are a few big centers, but it is spread over maybe about 50, 60 adequately large centers with great infrastructure. And on a forward-looking basis, if India has to sort of, we have to sort of walk away from this giant monolithic cities which power our growth. It can't be. And, if that's what it comes down to, then for sure, there is no answer. One, we have to clean up our big cities, right? But that's a time taking and, it will only give you as much result. But if the manufacturing sector has to drive our growth, which frankly it has to, then pretty much all of that manufacturing sector has to be far away from our large cities. The manufacturing sector has to be far away. I mean, it can't be, a Chennai kind of situation where you've built pretty good manufacturing infrastructure, but all of that is in the 50 to 100 kilometer radius of Chennai. So, people tend to stay in and around Chennai and then travel to their manufacturing setups, right? It has to be, we literally have to talk about, 30, 40 cities like the central part of India, Nagpur, Indore, Raipur, and so on and so forth, have to become big centers. So I think, the other part which I think is very important, and which is the white collar versus blue collar workforce question, right? Now, here's what I think is, maybe not a very popular view. While all the conversation around Delhi pollution is a white collar conversation, the real impact actually is what I would call on the relatively one notch lower and two notches lower part of our society in terms of their income segments, right? Reality is, the haves of the world will create cocoons around themselves, right? You go to Singapore, there's obviously the weather is unforgiving, right? It's hot and humid and just tough in many parts of the year, right? But there's a beautiful cocoon, right? So you basically go from air conditioned to air conditioned, right? So here, people who have the means will create the cocoon, right? You'll walk into your apartment complex, you'll walk down to a basement parking, which is also kind of the air is managed. You'll walk again to your car, and get to your office, park in the basement. Basically, you live in a cocoon all the time. You'll just not step out, which is what, for example, happens in Dubai. So the larger part of the white collar workforce, I think, will end up creating and sort of living in these bubbles and cocoons. Our real problem is on the blue collar workforce, and I think there's an important part. Another very important piece of the puzzle, which doesn't get talked about enough as far as air pollution is concerned. The larger part of a blue collar workforce, even today, whether there is pollution in Delhi or not, works in environments where the air quality is actually pretty bad. I mean, for example, I've done last 12 odd years, we've been sort of very deeply engaged with the MSME sector, which is how the furniture production industry works, right? And there are maybe about 5,000 on paper and maybe about 10-15,000 more plywood factories, for example, right? And it's actually unbelievable. You walk into a plywood factory, you will not believe how bad the environment tends to be, right? There's formaldehyde all over, which of course is a very well-known cancerous substance. There is wood dust, which is all the way from 2.5 to most of it is 8 to 10 PM, but there's enough and more material in the air, which is highly cancerous and sort of bad for lungs and so on. And and that probably maybe about 10-15 lakh people work in those environments, maybe more, okay, maybe a lot more, and that's just one single kind of industry, right? So our blue collar workforce, whether there is pollution in Delhi or not, large part of our blue collar workforce, irrespective of which city, which sector, is working in pretty bad for their health environments already. I mean, our entire agricultural workforce, right? Entire agricultural workforce is using pesticides without masks, right? And these are pesticides which are known to be terribly harmful, right? Now, really speaking, if we were worried about air quality and what we are ingesting through our breathing process, impacting the growth of our country, Delhi's air quality is, of course, a big problem and has to be solved without a doubt. But we have a much deeper, much bigger problem, which for sure is impacting. Life expectancy. There are enough and more studies which tell you about life expectancy of our agricultural workforce and how lung disease is impacted, or in most part of our manufacturing sectors, right? Large part of India's manufacturing is subscale, right? In all those manufacturing sectors, basically you have lower life expectancy. I mean, there is a reason why life expectancy of male population is lower. I mean, this is one of the big drivers, because obviously the blue collar manufacturing is dominated by the blue collar male. So, I mean, that problem of our productivity loss is very real and very acute. And it's not just a city pollution, but it's a workforce pollution, manufacturing, agriculture. The fact is, 50 odd % of our population actively works in agriculture even today. So tough problem.
And at the same time, we're also at the same time, there is a huge push on infrastructure. Government is trying to decongest cities through I think infrastructure is the first step. Roads, railways is the first step. And you're right. I think China today has, I think, 40 metros, right? And I remember in 2008, 9, 10, I remember reading in the papers that there was a directive over a 24-month period where all factories of a certain scale were given a 3 to 6 month window to move, I think, 200 kilometers outside the city. I think in mass, there was just massive movement of manufacturing outside. So I think we are stuck in this situation where we want to become a manufacturing hub. They're building infrastructure for it. We want to attract talent, but the unfortunate part is we cannot attract talent because you cannot throw talent in a far-flung environment where there is no infra and the quality of life is significantly different from a metro quality of life. And it becomes a very difficult problem. So then the infrastructure load, what it means, it could be that we might need 25 Jamshedpur and Bhilai type township mindset at a country level to actually make that work, because that is how we built our manufacturing in the 70s and 80s.
Yeah.
But we'll have to think about that today. But that it becomes a far harder problem also, right?
I mean, it is an incredibly hard problem. I mean, if you really ask me, the air quality, the heart of the solutioning of air quality is kind of known, as long as people are willing to acknowledge that these are the pieces of puzzle, right? You got to solve for mobility very aggressively. You got to solve for having or powering up many centers around the country for your manufacturing growth. And you got to find ways of decongesting your cities. And of course, you got to sort of add a lot more of green cover to your cities. That's the other thing, by the way, China did just insanely well. I mean, when I think back, I barely saw any trees in in Shanghai and Beijing. Even Beijing a little better always, because it's sort of, their heart city. But most of the cities barely had any trees, and now you go to any of these cities, the green cover is actually quite nice. The trees per acre, which is taken as a common metric. I mean, funnily, I was doing this study for Bangalore, and I used to stay in close to Whitefield earlier, and the trees per acre metric, the entire Whitefield area, this is 3-4 years back, which is sort of 30-40 is seen as a minimum kind of standard, and the entire Whitefield area and so on had like 1.5 trees per acre showing up as far as census was concerned. It's improved a little bit now, but I mean, that's the situation of most of our cities. Interestingly, I think, and I've been trying to find good studies on this topic. I'm sure there are, but I mean, but at a first principle level, one problem I feel that Delhi is also having is that the green lungs, while Delhi has a number of green lungs in that sense, but especially the PM10 particulate, I think is perhaps impacting the ability of the trees to produce enough to get the CO2 to oxygen conversion efficient, right? We don't think about it, but think about it, right? I mean, for us, when if we are struggling to breathe, the trees, that's their core process, like it is for us, right? They take in CO2 and sort of pump out oxygen. But if their pores are blocked with if you look at any tree, you walk around Delhi, you look at any tree, it's dust bladder. The leaves can't be functioning properly. It's just theoretically not possible. And of course, studies are enough and more studies, but I haven't found aggregate Delhi city. What is it doing to Delhi city green cover's ability to pump out oxygen compared to what it would otherwise? I mean, just for context, I mean, the PM10 concentration tends to be higher in Delhi pretty much all year round compared to the PM2.5 concentration. PM2.5 is worse off in its health impacts, and of course, all our studies on health impact, etc., are human driven, right? But for plants, I'm not sure. PM10 arguably can have a big impact as well on their core oxygen generating process.
Very interesting. Ashish, just what I'm hearing, it looks like that there is no short-term resolution to this. Most of the things which you are saying, whether it is development of new cities or people building a cocoon, will also take more infrastructure challenges. So and I have myself been a victim of throwing or moving out of NCR because of this one being one of the primary reasons. So from an economic impact point of view, then you're saying that okay, these 2, 3, 4 months which are extremes. People are maybe like what happens in Dubai, people move out during summers, go to Europe and then work out from here, or a work from home starts to take precedence, which has lower productivity.
Well, actually, to your point, maybe you should take that a little to the next level, Chirag, to say that while blue-collared workforce in quest of work may still end up at NCR, for the white-collar workforce, technically the optionality of something like a Bangalore would exist, which is a sub-100 AQI throughout the year, right? So, I mean, I'm not sure of the second-order impact of that.
Yeah, but what I was getting to is that when people move out, okay, that's like, one call. But if, let's say, I know 8 out of 10 people don't move out, right? Because all of your friend circles are there, your company is there.
Yeah.
So
it's not a practice.
It's not an easy decision. Your parents are there. So it's not an easy decision. And then if you end up staying there is loss of productivity because of, either you are working from some other country, some other location, or office gets disrupted. So that was at least I was getting to. And then, of course, the blue collar thing, that they are forced to work and they don't have anything to do, right? Look at all of these Zomato, Swiggy riders. They are though going through this insane, trauma on their lives. What should be done if this is a permanent state of cities? No, Ashish, very interesting points. I think realization for me that this Pirali thing is more correlation rather than causation. The larger causation is these mobility and construction linked issues. And what at least possible solutions you were indicating is that we need to decongest our cities, or at least there is nothing which is short term available. How should one, let's say a business person who's running their business based out of NCR, should be thinking about this both from a white collar and a blue collar perspective? That people will not be available during this time. It will start to happen that a Dubai type thing where in summers people go to Europe. I'm assuming that in November, December, Jan, Feb, people will go on a 4-month work from somewhere else kind of a mode. It definitely impacts productivity. I've seen people fall ill extendedly. There are parents issues, so it overall is a somber mood, just from doing business point of view. Similarly, I can imagine, think about those Zomato, Swiggy riders who are operating in Delhi NCR. How do you operate a business in such an environment where they are going through this, except for, let's say, getting them more insurances? How does one think about it?
Yeah, I think it's no easy answers. Yeah, I think as and by the way, this sort of people falling sick is now an increasing trend across cities. Bangalore, we have the flu viral going on all year round. So, and clearly increasing, no question about it. So, I think that problem is a real problem. I wish I could think about an answer. I think for white collar workforces, people will find suitable answers, relatively easy to find. Fact is that people got work done during COVID. I mean, that's the reality of Delhi. Then systems will adjust. If productivity drops had to be so acute during those 2.5 years of fairly intense work from home during COVID, we would have had a significant drop on the global GDP as well, right? Or Indian GDP. It didn't really happen, right? The drops were because certain sectors, etc., consumption went down. The drops were not supply driven or productivity driven. So I think this personally, I would not be terribly worried about productivity drops in the overall white collar workforce and businesses that engage them more heavily. I think the bigger drops we will see will be on the blue collar. And for example, you spoke about the riders who are delivering stuff, right? There again, because the business models have evolved, the impacted will be the rider, not the organization. I don't mean it in a bad way. I'm not saying those organizations are not caring and not trying to do the right thing, but just the business models have evolved. And so I think the in my head, the hierarchy of problems, the social problem, which is of course government-led solutioning, is a much bigger one. That people who don't have the means will get impacted the most. Their productivity and hence their ability to earn will be impacted the most. Their healthcare needs and requirements and costs will go up the most. And that, of course, is a problem which lies squarely at the in front of the government. That, of course, impacts aggregate productivity of the system very significantly. But the impact on the government spending arguably will be the most acute. So that's, I think, in my head, the number one problem in hierarchy. I would say for let's say what you describe of, for example, entrepreneurs like yourself or anybody else, right, like myself. I think we need to just think through how we configure ourselves differently and plan for the worst AQI months. To the extent possible, if we have ways, I mean, I was chatting with my co-founder and CTO last week actually, and we were discussing while we are very young startup. We were discussing whether we have a possibility of over a period of time, migrating our core operations to a smaller center. Whether it's Jaipur or whether it's sort of even smaller center, and that because it's just ability to work all year round and be productive will be higher. So I think those are questions that let's say I'm just making this up. Let's say Bombay Shaving Company has multiple kinds of operations. Whatever they can arguably migrate away to smaller centers, they'll just benefit. They'll also, of course, benefit from lower cost of working as well and higher productivity. So conceptually, one can easily imagine that you will get from a lower cost working environment, you will be able to get higher all year round productivity in a smaller center in India. So it's just good economics actually.
You're saying let's start considering this as a season instead of it's become BAU then. You consider like in Dubai, you would consider 50 degree plus as a season and then you'll plan accordingly. Same. One should start thinking, which is a mind shift.
See, I think it's BAU. I think the two more variables to consider, which are important. One, this season, if we call it, the length of the season will only increase till big structural shifts take place and start having their positive impact. Right? Till then, though, this length of this negative season, let's call it, will increase. For example, the data from some of the studies, if you take a 45-day period, 15 September, 45-day forward, right? Let's say, end of October, there over the last 3 years, what they count as very poor AQI days has gone up from 5-6 over the last 2-3 years, maybe 22, 23, 24 years. It has gone up from 5-6 such days to 12-13 such days in a 45-day period, right? And of course, this was data till end of October. The worst days came in this year November. So the number of days where the AQI is counted as very poor or worse than very poor has kind of give or take doubled over a 3-year period. So this I feel uncomfortable calling it a season.
Negative.
All right, say the negative season. The length will increase and the number of days where it is very, very bad will also increase. We should take that as a
interesting. Also, I think when you talk about Bombay Shaving Company moving out, we've discussed this multiple times. Like Delivery moved to Goa, M Caffeine moved to Goa. I have a setup in Pune where I grew up. Deepak and I discussed, the senior team discussed, and we're like, boss, in warehouse, mein to 70 log hai. What do we do with 70 people in Delhi warehouse? You will have sales officers all over the city of Delhi, from Lucknow, Agra, Delhi, Chandigarh, whole of North India suffers much. It's not just an NCR issue, right? We can't move everyone. And it feels almost defeatist or it feels unfair to an extent ki HO move kar lete hain. Market, people who can work on a screen or who can work in an office will move. Everyone else has to continue working. And that call personally becomes very difficult for me to take. So the inertia on these, and I'm assuming everyone is thinking about it this way, that if you have a workforce that is predominantly blue collar or cannot move geographically, then the center of gravity stays there and then the companies continue to stay there. I think also, Ashish, what you said about people becoming sicker and sicker a lot more frequently, more intensely and more frequently, also real, yaar. Like I was watching a chess tournament the other day, and I don't know whether any of you watch chess, but if you watch chess, what are the biggest difference between a India hosted chess tournament and a foreign hosted chess tournament is the amount of cuffing in the background. It is very, very palpable. And if you go to any YouTube video and watch a chess highlights match, this thing also, just look at the comments. It's someone's cuffing means it's being hosted in India. And it is so true. And it is very unfortunate to say it, but people are getting sick a lot more. Like I just see a lot more. I would like to see this number of leaves being taken on like this flu or whatever. And that's not healthy for us at all.
Yeah. Shantanu, the point you were making, I think it's an important point. I think one thing which I would say all companies which care about their team members should absolutely consider are better solutions on personalized air quality management, masks, helmets. I mean, technically those solutions are possible. It's not as if they are not possible. Just that, obviously it needs people to take a lead and say, you know what, this is a real problem and we are committed to solving this for our team members. I mean, it can't be solutions which are clunky and which sort of, make people uncomfortable and sweat and, that doesn't work. Obviously high quality solutioning is required, but it's of course.
At least what I'm hearing, Ashish, is from a business point of view, at least air purifiers, immunity boosting medicines, etc., all of those have tailwinds, right? Whether B2B solves through companies or B2C, because you are saying that negative season is increasing, right? So it's not going away. All the solutions are long term. Okay. And maybe, one needs to solve for that blue collar people who don't have the means. How do you support them with those solves? Is an interesting one.
That is a part of the solve that's actually real. Just think about it, right? Think about the numbers. How many people in this country work in white collar, right? Or above a certain income scale. And their ability to solve for it is actually much higher. The vast majority of our population is working in those environments. And they don't have an answer at all. I know we are all entrepreneurs, so our instinct is more capitalist than socialist. Mine over a period of time has become increasingly socialist. So it's a genuinely worrisome question.
Yeah, like I don't want to go down that path that Chirag suggested because we covered Honasa in the beginning. I'm sure a lot of D2C brand entrepreneurs are listening. They're smacking their lips saying that oh my God, immunity and cold and cough is the next big thing. I hope we are actually able to find a fundamental solve. I hear your views on white collar folks figuring it out. Like I know personally a lot of people, whether it's entrepreneurs or investors, builders, companies that have actually moved out of NCR over the last 5 or 10 years. In fact, I think Shantanu, you had that chart, right? Recently, last few days, I think Times of India did a full coverage on growth of startups across cities. And it was sad to see even Bombay had that problem. And I keep telling folks of how bad the air in Bombay has also become over the last few years, largely construction, vehicular, because I think the industries have over time moved out of Bombay. But clearly the island city, and in spite of it having a coastline, right, where the breeze is actually pretty decent, not as great as Bangalore, but at least the breeze is decent enough where a lot of the pollutants should be able to get, the wind should help not have pollutants settle down, but clearly the AQI days that are poor, very poor, even in Bombay over the last 5 to 10 years have increased significantly. And clearly shows in the kind of number of startups or number of businesses getting built in now cities like Bombay and Delhi compared to cleaner air cities like maybe Bangalore and Hyderabad. I don't know if you have that chart, Shantanu, somewhere. Would be.
It's on my phone. My phone is this thing, but we'll superimpose it on screen.
So just from a purely capitalist point of view also, I was just wondering that while we can take the, I honestly believe that entrepreneurs and businesses are fundamentally going to help move this country forward, right? And while the consumption is increasing by design, the youth of today, the more they help create large businesses, either by starting businesses on their own or by fundamentally joining some of these businesses and creating impact. Like we are seeing how many new jobs have been created by startups over the last 10, 15 years, right? So as we try to move from this 3,000 or whatever, I keep seeing different numbers. So between 2,500 to 3,500 or 4,000, wherever the you think our GDP per capita is, move to a 10,000 plus level that China has achieved. And for me, that's what stuck to me, right? And I would love to maybe deep dive in the future at some point of time to understand how did they actually make this transition while maintaining the growth rates on manufacturing, production, consumption going up and cleaning up their cities, right? Just seems like a Herculean effort, but clearly we need to have that plan in place over the next 10 years because we will not achieve our what the PM loves to call Amrit Kal. I fundamentally see this as an existential threat to that Amrit Kal because we can't create 7% GDP growth over the next 20 years if this continues.
Yeah, I mean, I would tend to agree with the last point you're making. One disagreement, though, in the emotion, just because companies or businesses are choosing to move out of the big centers, it's not a bad thing. It's a good thing. We shouldn't worry about it. We should find ways of encouraging it, right? I mean, you guys invest very actively. So, arguably finding the right entrepreneurial talent in smaller centers is actually a good thing. It's one of the best things that can happen to India, right? And I think so. We don't need to worry. In my view, we don't need to worry that Delhi's GDP going flattening even, right? It's not a bad thing. It's India.
Yeah.
We need to think about.
Oh, absolutely. But my limited point is, Ashgo, that this problem seems to be acute across India now compared to just NCR for that matter. So I take your point on smaller cities and love the thought. I think Jaipur has actually seen a lot of new startups getting built. Same is happening with Hyderabad now compared to what was happening, let's say, 5-10 years back. Hopefully, a lot more tier 2 cities sees scale up of entrepreneurship. And as I think very adequately put, if you see most of the funding that's happening from investors on the venture capital side is largely still in the top 3-4 cities because they fundamentally believe that the talent density is what helps create a startup and therefore or make a startup successful, which by design is easier to do if you're in a talent dense city like Bangalore or Bombay or Delhi or Hyderabad for that matter now. Very hard to do in a city like Surat. But for all we know that's where the real impact gets created. So the gap between impact creation, what the country requires versus what gives you 30% IRR is it's a good, interesting point to think about how do we bridge that gap.
Yeah, absolutely. And I think there is a divide between the software type world and the non-software type world. I mean, for example, Revant, your business arguably is really speaking more non-software type. So I don't know if you guys do manufacturing yourselves or you may think about doing manufacturing, right? And that arguably may end up powering the quality of your business over a longer period of time. And then that, of course, can easily and should arguably be centered in a smaller place, right? I think you guys are headquartered otherwise in Bombay, right? You don't need to have manufacturing even 500 kilometers around Bombay, right? And that just completely is a game changer on many levels for you as a company. And if you multiply that across tens of thousands of people who make those same choices, then of course that sort of becomes the in some sense, while it's difficult to see, but if that happens more and more, that is the structural shift of tens of thousands of businesses locating there. Really speaking, the next big wave of economic growth of India cannot happen, and the government, the prime minister, have been very, very clear about their own their thought process and their vision on this topic, right? They are obviously very clear that the real growth for India will happen with manufacturing. Not to say the knowledge sector is not important, service sector is not important, but for India to really step forward and for a next 30 years to be a 7%, 8% kind of growth economy, manufacturing has to be the sort of heart of it. And there when we think of entrepreneurship, startup world, we are generally tending to think about the service economy, the software led growth, but for India as a whole, the real growth has to come from the heart of the growth has to come from when we start manufacturing a lot, right? We start exporting a lot more. A large part of our demand starts to come from own manufactured, which government obviously has been taking. I mean, my view, very strong and I think laudable steps to push that down, right? So our fiscal deficit goes down with lots of positive multiplier.
But no, yaar, I think this is a phenomenal discussion. Every time I talk to you about climate, I just realize how, just because we don't feel the impact every day, we kind of feel it only once in a while. And we have almost gotten, I hear arguments from people that say, people in Tibet also are able to live without oxygen, and they evolve to kind of, their lungs evolve and so on. And I'm like, no, that doesn't work, because, this is like truly polluting and life expectancy issues and so on. But every time I talk to you, I feel like, the scale of the problem is so much bigger, and it is a social issue. It is a public health issue. And this time people have used words like national emergency multiple times. And I think, when the floods happened in Mumbai in 2005, NDMA kind of, Manmohan Singh kind of set up, and the disaster management authority. And I think this is now reaching a scale where 10 crore people, like you said, getting affected every year in such severe ways. It's a social and public health issue that I do feel like entrepreneurs and businesses have a role to play. But
Yeah.
I don't think we will feel it. Frankly, we will be in our cocoons and we will find answers. I think the 90% of, like 50% of India's population like sprays monocrotophos, for example, which is banned in all countries in the world except for North Korea and India. Like, I did not know that until like someone told me. Like, we wouldn't know it as a layperson, right? People don't know these things. So we are very insulated in a big way. But I think the second order effects on us, in terms of just movement of people, blue collar effect, life expectancy going down, is just massive.
Yeah.
Government deficit will be painful. Yeah, we'll have to solve it. Yeah, let's go solve. कैसे करें यार इसको, मतलब there has to, like you said, when we spoke on the phone the other day, you spoke about academic consensus, you spoke about social will and political will. But can the average entrepreneur, citizen, person, like, what, beyond what we discussed today, like, is this about
He mentioned that
making enough noise so that
the manufacturing business sets it up in a tier 2 or tier 3 city, which is away from, so that you have dispersion of manufacturing units across, and not a very dense city where there are too many manufacturing units. Make sure that you're exporting. So just ensures that, and therefore you're creating employment, you're creating value, you are creating jobs for people, you are helping the economy grow. And essentially, you're helping the economy grow by consuming some resources inside the country, helping create adequate employment, but also because you're exporting, you're essentially capturing a lot of the value that maybe developed nations would have, and basically passing some of that wealth.
also moving the center of gravity away, in a way, in whatever small way. If like 100 factory owners and that 1,000 kind of do that, then slowly kind of it moves away. And
Those small ways add up.
If ever we add the epitome for बूंद बूंद से सागर बनता है.
Yeah. But वो वैसे ही
No, excellent.
बनता है.
Yeah, sorry, Ashish.
See, we often, yeah. No, perfectly fine. I think the only point I would make is, for anybody like me who keeps doing all research on all kind of climate and what's called anthropogenic factors related topics, most of the time you come across fairly net result you come up is basically depressing, and then you have to so we have a like a climate folks. I have like 5-6 people every few weeks. Some of us will call each other and express our depressed state, and then say, "No, okay, fine, whatever it is, let's keep doing what we want to do, what we think we should do." Awesome, yeah, thanks a lot.
we need people like you, Ashish, not only people who are building in the climate space and doing such amazing work through your like full-time jobs, but also people who think through, kind of influence people around you, and hopefully over a period of time kind of create change. We've spoken about Dr. Bhagwat, or all the people that of course, I really feel like the more people like this there are, at some point we will move. Like after this discussion, Revant, Chirag and I will probably make some change in the way we operate, and then hopefully we influence more. And just thank you so much for doing that.
Thanks for raising the time, Ashish. Lovely having you.
Thanks a lot. Thank you very much. Okay. Take care. Thanks, Rahul.